Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about HDFC AMC, which I feel is slightly expensive but a very good 5 to 8 year play. So let's understand the business and let's understand what you need to do with the company. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about HDFC AMC, his small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions in greater detail. Once you get the $10 membership, you will have access to my portfolio, my watch list, a number of podcasts that I put up every couple of days, and a number of you can have queries answered by me instantly on Patreon. If you are a member of $10, I answer probably in an hour's time. For detailed market or company talk or a number of stocks you are holding individually and you want one-on-one discussion, you can directly email me and we can work things out. Now about the company. Established in 2000, HDFC AMC provides mutual fund and other portfolio management services. So they have different levels of mid, small cap and large cap portfolios that they build for their clients. And they have the AMC business, and which has been doing well over the last 3 to 5 years. It is backed by the HDFC brand, so there is a definite backing of a very good quality corporate governance. Holds largest investment from retail clients into this one, and has been a market leader since its inception. So over last 20 years, it has emerged as the market leader in this space. There are other AMC companies, but HDFC AMC is the best among these. If you look at the numbers, the Q2 numbers were pretty decent, 3.5% year on year growth on sales, although the profit declined by around 7.5%, but yet the sales went up by 3.5%. A zero debt company, and this is extremely interesting. There is debt, but there is only working capital debt, but there is no major debt to be considered, and that is very good for an AMC company. High promoter and institutional holding with only around 10% a free float, a return on equity of 35%, and operating profit margin of around 70 odd percent is extremely fantastic. Why the euphoria with the stock? Moat and leadership. The first thing is moat and leadership, and that's why the stock at one time, probably a year ago, was trading at something like 80 90 times earnings, around 70 80 times earnings. Today it is trading at around 40 times earnings, and the biggest reason for this was leadership in this space. And with more funds coming into the AMC space, coming into the market, into mutual funds as well as into stocks, there was an understanding that HDFC AMC would be getting the major chunk of that funding from the retail investors who are getting into it, especially in the last 7 8 months. Along with the shutdown, people have gone ahead and invested more into the market because they wanted returns from anywhere, because people are losing job, people are having lesser salary, so they want to eke out more returns from the stock market because they are seeing the markets going up. So more individuals are getting into the market through SIP, through other routes, and HDFC AMC is getting the major chunk. So that is why the euphoria for the stock was there. Exceptional return ratios, as I have just mentioned, which is quite evident, and it looks like it's long lasting. You have the backing of the management, so it is not a company that could go under or that could have corporate governance issues, etc. So the management is top class, there is no denying that, and the business has a longevity to it. So this kind of a business with the kind of low penetration that equity investment and you can say market investment has currently in India, I think only 2 to 3% maximum, to around 2% maximum is what people invest into the market. 2% of the people who are salaried class invest into the stock market. That's my understanding. So in that regard, this has a huge you can say prospect going forward over the next 8 10 years. And remember that quality is always selling at a premium. You look at a Bajaj Finance, you look at an Eicher, you look at now HDFC AMC, HDFC Life, you look at HDFC Bank, you look at a Maruti, you look at all leadership stocks, Asian Paints, Pidilite, etc. They all trade at premium, and HDFC AMC is no different to them. If you look at the stock technicals, then currently it is trading at 40 times earnings, which has been pretty okay because it was trading at 60 to 70 times earnings a year back. So it has corrected over time. The correction has been 25 to 30%. The stock has not moved, but I still believe it is slightly expensive because you look at, see, it is not an insurance business. This is an AMC business, and this is more related to market movement. And if the market falls and the market really corrects a 15-20%, I can say that people will invest less into the market, and that is where the, you can say, the fund flow into HDFC AMC will reduce going forward. So in that regard, there could be a situation where the earnings will not be the same as they have been over the last 2 to 3 years when the fund flow really came in. Having said that, over 8 to 10 years, it is a very, very good buy. But I think around 2000 is a very good levels to accumulate this, between 1900 to 2000, rather than buying at 2400. Those who are having it can hold on to it. Currently it is trading at 12 times sales. Currently it is trading at 40 times earnings. I still believe it should be trading at somewhere in the region of 30 to 35 times. So there could be 15 to 20% fall, any 10% fall, any fall closer to 2100, very good levels to get into. Over 7-8 years will give you very good returns. Over the next couple of years, there could be a chance that the stock could go towards 1800, 1750 levels. That is not to say that you sell, because anything can happen in the market. It could be a possibility that the stock heads towards 3000 and then reverses to 2000. So no need to sell the stock. It is a very good quality company. It is just that you need to add on whenever it goes closer to 2000 or 1900 levels. So what needs to be done? In my opinion, buy on major down days. So when the market declines 10 to 15%, whenever it happens, say 1 month, 2 months, 3 months, 5 months down the line, you have opportunity to buy such stocks like HDFC AMC around 2000, 1800, 1900, around those levels. Accumulate this stock. Yes, there could be a situation that over the next 1 year you might not make return, but over the next 5 to 8 years this will give you decent return, maybe even 20 to 25% CAGR on a 6-year basis. Hence, probably leave alone the next 1 year. I am not very positive on equities for 2021. There could be a situation that we would be having either a very you can say tame year, a very sideways year, or a down year, most probably a down year of around 5 to 8% on the equity front. So we could be down something like, we could be at 11,800 next December. That's my understanding, 1,000 point decline. So in that regard, we could be seeing HDFC AMC at 2000 even after a year. So that is why it is better to accumulate over a year's time. Have only 5% exposure into such stock, but over 5-6 years, this will perform very well. It is a very good top class long term buy for me on declines. So this was my video on HDFC AMC. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.